Hey everyone, we're here at the IMN event in Denver, Colorado, and have the pleasure to speak a little bit with Devang Shah with CityView. You're going to be speaking a little bit later today. Why don't you take us through a little bit about your firm, because you are kind of the triple threat. You guys do amazing stuff. Have some great partners here on the West Coast, but maybe we can share a little bit about your firm first. Sure. Yeah.
Yeah, we've been around for about 20 years, 2003. We have a series of funds. We're a vertically integrated operation. We invest in value-add properties, do entitlements, land acquisitions, and development.
Right.
So, as I said, we're vertically integrated. So we have property management on site, property management. We have development on in-house as well. So yeah, that's everything.
Awesome.
We're generally focused, Texas and Denver West, I would say.
Okay.
We're probably known more for our development, but I would say 50-50 between value add and development as well.
Right, and you're going to be speaking coming up in a little bit. If you can share maybe some of the secrets, nuggets. Sure. This won't be published till after, but what you're going to be talking about.
Yeah, we're going to be talking about like what kind of yield on cost people are expecting, how we underwrite deals.
Excellent.
Also, we're going to touch a little bit about the fact that deal volume is generally low. Is that a good thing or a bad? I think it depends. I think it creates a lot of great opportunities, particularly on the land entitlement type structure. There's not a lot of value add in terms of activity out there, but I would say there's definitely lots of good opportunities on the land side. We do some acquisitions as well. Always needs to be a story. A lot of the acquisitions we do with joint venture partners. And so, for instance, we recently closed on a deal, it's been 2 weeks now,
right.
$110 million in Los Angeles. It was, a developer who had run into some trouble and finished the building, and we ultimately bought it from them at TCO, and we had some good market knowledge of what the rents are in the market, given we were leasing up just down the street. We're able to bring in the pricing almost 30% below where they started.
Okay.
So that's an
example.
Any
LP's ears?
It is.
Yeah.
And that one we fortunately were able to do with one of our fund investors as a co-invest, separate co-invest.
Are you more focused on high-rise, mid-rise, low-rise? Do you have a preference?
Yeah, we typically focus on, we'll do podium structure down to garden style, including spending some time, I would say, in Denver markets looking at garden and townhome development as well.
And obviously a lot of people, haven't been through a lot of cycles. A lot of people tend to be, it almost seems like short term. Is your view, you seem to take a longer term view, right?
Yeah, been through a few cycles.
Yeah.
My grades don't tell you that, but that's where the opportunities are, right? During the GFC, we were around since 2003 in GFC. Right in 2010, 2011, we started really our first foray into multifamily. We used to be predominantly a for sale shop.
Okay.
And then we got into multifamily soon after the GFC, and we were able to, buy a lot of different properties, and that's when opportunities were galore. Really, that kind of changed us as a firm and became vertically integrated. And we don't do LP investing, but we do obviously joint venture.
It's the way to do it. Partner up.
Yep.
Find great partners. Work with them forever.
And we have a series of great partners, and always looking to find new ones that are great to work with as well.
Awesome. Well, thanks so much, and looking forward to your panel in a little bit.
Awesome. Thank you.
Talk soon.
All right.
Bye-bye.
Appreciate it.